Life is grand. Life is good. Life is beautiful. Gotta give it what you got. Gonna get what you give.
Life is grand, life is great, life is good, life is beautiful. You gotta give it all you got, everything you got to give. Time to shine, time to live. Life is grand, life is great, life is good, life is beautiful. Now you're living out your dream with your hopes up high. Your only limit is the sky.
G'day, mate. Shall I throw a pip on the bobby for you? Worry, Bob. Hey, good morning, everybody. Let me remind you that trading is risky. Now let's do the long one. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Wait, that's not even it. Welcome to Forex.Today. Let me remind you that the purpose of this presentation is education. This is not an alert service. I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Don't touch the stove, it might be hot. Hi. How you doing? Hey, baby. Hi, I'm Wayne. What's your name? Hey, I'm a currency trader, been doing this a long time. I'm here to share. I want you to grow as a trader, learn from my experiences, good and bad. I want you to develop positive trading habits. And I want you to be independent, which means I don't want you to spend the rest of the day trying to figure out what trade I'm trying to squeeze you into. I want you to learn how to think for yourself, and you never, ever, ever have to listen to anybody ever again if you don't want to. You can take care of yourself, you can take care of your family, take care of your friends. Everything else is nonsense. Is that fair? Right? If that's off mission, you let me know. But I want an army of independently thinking traders that can make decisions based on facts, not assumptions, rumors, or gut feelings. Okay. Yesterday, we were preparing for some Mexican peso strength. And I did it on a longer time frame because I didn't think it would happen so quickly. But we thought yesterday it would come back to the 382, 50% kind of area, and then fall, meaning that the Mexican peso would get strong, even though we're in a horrible, horrible, horrible weakness trend, bearish trend for the Mexican peso, which means up for the Mexican peso. But for some stupid reason, yesterday, in fact, the day before as well, and all the way back to Monday when we were up here, we were planning for some sort of reversal pattern and drop. And here's what's happened in the 24 hours since yesterday when we did the fib. Remember, we fibbed it, and we looked at the roll reversal, and then we projected down. And, well, it came up, as you can see here, right into the middle of our suit spot, and then dropped, reversed back up to the roll reversal, and then has dropped again. Completely, totally lucky, sure. But it's amazing. You know, the harder you work, the luckier you seem to get. Have you ever noticed that, guys? Huh? Or is it just me? Life is great, life is grand, life is good. Is my mic working or what? Oh, you know what it is? My chat's not updating. Hang on, you're probably saying beautiful, wonderful things, and I have no idea what you're talking about. There we go. For some reason, my chat was not scrolling. Hopefully, it was just temporary. All right. So, anyways, yeah, blah 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 blah. Yes, 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 yes. Blah 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 blah. All right. Yeah, looks like it's going. Okay. Not lucky anymore. Genius. It's genius. So, fifth genius. So yeah, a lot of luck, of course. One of the things we said was that there's no way in hell that OPEC would make an agreement yesterday. I did that because, well, Saudi Arabia and Iran, at the beginning of the day, before they even met, said there was no way in hell that they were going to have it. They weren't even going to talk to each other. So yeah, remarkably, when the oil market opened for trading in the United States, the OPEC meeting started. Isn't that funny? Isn't that funny? That they're on the, a long ways from the U.S. trading pits, but somehow the meeting started when those pits opened. And just before that, they said, yeah, there is no way they're going to come to an agreement. Obviously, oil prices fall. I wonder if they started buying futures. I wonder if they played everybody for a fool. I mean, they're that desperate for money, maybe, right? Yeah, there's no way, wink, wink, nudge, nudge, we're going to have an agreement. We're not even going to talk to each other, wink, wink, nudge, nudge. Oil prices fall, they buy it all up. And then magically, right at the close of trading in the oil pits, not stock market, oil pit trading, suddenly, ta-da! There's a deal. Oil prices skyrocket. They didn't wait until after the close. You know what I mean? It's just, wow. So I was on top of that. I stumbled upon the news 11 minutes after it happened. I'm like, holy schnozer. So luckily I caught it on the first candle anyways. But you got to be on your toes sometime. But this is just sort of a beneficiary of that, of oil getting stronger. Oil is a major export of Mexican peso. We just happen to be buying Mexican peso. Stupid is as stupid does. So it worked out. Sometimes it works out for you. Sometimes it works out against you. When you're an old dog like me, you've seen it all, and it all averages out. Don't worry about it. Right. That's not genius. I wasn't buying oil here on this trade. I was buying repatriation flows, which is just logic and intelligent stuff. Not a problem, right? Yes. So this one went our way. Great. Fine. Good. Ish good. Don't worry. Ish good. Right? So, and you can see yesterday we were pointing oil down. Okay, fine. Well, oil went up. What else was going on in the world? We thought maybe gold would rally up to this cluster in here between the monthly central and the weekly central. Right? We're missing this part here. Okay. What happened is it ended up spiking lower, retracing to the first part of our sell zone, and then fell. So maybe we're still on our way to 13. Could be a rabbit, could be. But once again, if you're on the right side of the trade, you get lucky. Yeah, damn it, this is insider trading. Well, is it insider trading? Are there rules to such things? Whose rules are they? OPEC's rules? The oil pits? are going to sanction the finance minister of Venezuela, or what? Right? Like, So that's just interesting, right? So another thing that gets strong, and you may recall our discussions yesterday on this setup, and there was no Noki over here. We did Mexican peso, we did crude oil. There was a bit of a CAD somewhere, but we didn't talk about Noki. So 11 minutes after the OPEC news came out, I pinged Ryan, and I'm like, Noki, peso, right? CAD, as fast as you can. Cool. That would have been sort of in here. How nice, huh? So the world is shocked, right? Everything's out of control. OMG, WTF, WTI. And then what does it do? Comes down to the monthly M1 and stops. Don't you love it? Like, how redonkulous is that? Even under like crazy stress, the market behaves exactly the way it's supposed to. Yeah, cats living with dogs, right? Isn't that nice? But look at this. You see? Yeah, it only double topped at the monthly central pivot point last week, and this week hit the conservative target. Now, typically, if that's your high, right, you're actually supposed to go to M2 or S2, but I don't know where you want to play this. So I would, if I were me, it's tricky because it's basically the last day of the month, but if you want to call this here, this is the M3 monthly M3. So I don't know if you happen to write a book on how to trade Forex, I don't know, about 8 years ago, based on patterns you've been trading for years and years, what sort of pattern would you write in your book that would say, if the top of the market is monthly M3, what is the projected bottom for the market? And under those scenarios, I would say, if I were me 8 years ago, writing about patterns I have seen in the market for years, this would be the projected bottom for the month. Isn't that funny? M3 to M1, right? Right? It's in the book. Isn't it like it's crazy, isn't it? But notice, okay, M3 down to support 1 to central pivot point to conservative target. The aggressive target's here, but usually that's reserved for this play here. If we hadn't done this, okay, if this was the top, then I would say this is the bottom. And did you notice the monthly weekly cluster, monthly and weekly support too? So I kind of want to go there anyways, just because that's so sexy. That's so sexy. I want to get down there. That's where I'm aiming, right? Why not? Because it's just so beautiful to have a monthly, weekly overlap cluster, right? A confluence of support. That's how we do it in Bruges. My book is the absolute total definitive answer. It's the world's greatest book on Forex. There's no other books even in comparison. Oh, wait, if you go to Amazon.com and type in Forex, you get 40,000 books. Yeah, best ever book ever read? Yeah. Yeah. No, I wouldn't say any of that. But I don't know, honestly. So, like, when I taught myself pivots, there was no information about pivots. So, like, whatever book you buy about pivots, I don't know what it says. I mean, I might actually trade pivot points completely wrong, but I doubt it. So I don't know what other people say because I don't know. And maybe I'm a little facetious here, and maybe there's some truth to it. But I might have taught those guys how to trade pivots, and now they write books on trading pivots. I mean, I don't know. Nobody taught me. So yeah, I don't know. But there's the pattern. Right? Or how about this? How many Forex books have been written over the past 8 years after I wrote mine? How many books? Thousands, right? Oh my God. When I first started trading, there was only one book on Amazon.com related to Forex that I remember. It was Forex Made Easy. And I'm like, Forex Made Easy? That's that crap they're selling on TV. And people paid $5,000 just to have a MACD indicator. Right? And the book was to promote that thing. So I'm like, whoa, man. So there literally wasn't anything to read. So, anyways. So you don't need a book, Brooke. You need me. I'm here every day. My price is free. I care about you. Love you, man. I'll teach you everything I know. And then you'll go write a book and put it on Amazon.com. Yeah. Right, Gift? Isn't that how it goes, Gift? Yep. Think I'll just write a book. Do it that way. And just to clarify, just in case you're worried that I'm making so much money self-promoting my book here, I spent more money on the launch party than I've ever made in commissions and royalties or whatever you want to call it from the book. I bought over 3,000 people a beer or wine in custom printed cups with custom tickets and signage and posters and dude, seriously, like, so I've never been in it for the money. All right. So yeah, sounds like a great party. It was I can't remember, one of the Forex expos in Vegas, I think it was. I think it was the Vegas show. Yeah. All right, cool. So anyways, enough about me. It's all about you. Who cares about me? Let's do the time warp again. So there's a deal. What's the big deal about the deal with OPEC? What's the deal with OPEC, guys? The deal with OPEC is that if OPEC creates a floor in prices, and let's say $40, then there is potential for an upside in oil, limit to the downside, and that could possibly, maybe, perhaps create some inflation. So if we go from $40, actually 45 is what it was, just the other day, yesterday maybe. If we go from 45 to 55, that's roughly 25% increase, right? Because 40 to 50 would be 25%, right? So, that's very inflationary, and seems to me every central bank on the planet wants some inflation. You see? So there's a lot of hope and a lot of prayers into that, but it could be exactly what everybody needs. The US dollar might get strong, for example. The Japanese yen might get weak, so on and so forth. It's what the central banks are trying to do. To say it differently, the Fed, the ECB, the Bank of England, and Bank of Japan, Bank of Canada, Bank of Australia, Bank of New Zealand, and many others, in the aftermath of the global financial crisis, they instituted central banking policies that created trillions and trillions and trillions of US dollars, or let's say in currencies valued in US dollars would be trillions, to create inflation. And then the United States government totally mismanaged the oil industry, and all of a sudden we had new technology that came in. Nobody apparently in the regulatory, you know, branches of the U.S. government that's supposed to oversee the oil industry apparently saw it happening, didn't know it would happen, didn't know anything about fracking, didn't watch inventories, I don't know what they were doing. Sort of like the cousins of the guys that were watching the financial industry and regulating them didn't see the crisis coming. Like, really? What was it that they were doing then? Right? So same thing, kind of the oil industry. The United States completely mismanaged the oil industry. And so after the government printed trillions of dollars to create inflation, they flooded the market not with just oil, but with deflationary pressures. We wasted all that money, just threw it all away by mismanaging oil. How nice is that? So anyways, maybe now, if we found a bottom for oil, then maybe we get that inflation, or at least we stop the deflation, and it's the beginning of a new trend, right? So the announcement happened here, and I'm like, WTF, boom, and I got in here. And this is my buying kitty cat. A kitty cat, obviously CAD and oil having high correlation. But yen, why does yen weaken? Well, again, sort of these forces. The Bank of Japan's trying to decrease the value of the yen. And other currencies and their corresponding central banks are trying to do their things. And they're all relying, whatever their policy is, either to strengthen their currency or to weaken their currency, they're all waiting for inflation to come in, and inflation's being retarded by the depressionary or deflationary pressures of low oil prices. So it's just simply a pivotal point in the fundamental process, not the technical, right? And so I'm long and strong here, partially buying CAD, partially selling yen. Okay. And like I said, I was a little late because it wasn't a scheduled thing. It was completely unexpected. But let's see if I can kill the scroll. Not into the beginning. Oh, come on. But, you know, ready to jump kind of thing. Oh, now it's gone forever. I don't know where it is now. No. Come on, MT4. Genius. Okay. So this is why you never turn your back on the market. You ever watch that the show where I think it's Castaway, where he's working for FedEx and he teaches people never to turn the back on the clock? There you go. It's sort of like if you're a currency trader, especially if you're in your home office and you got your computers running 24 hours a day, you never turn your back on the market. And so here's the ridiculous surprise. And so I was 4 minutes late. Still got the pullback though. Smarty pants. What a smarty pants. 4 minutes late, dude. Can't turn your back. Okay. So here we are. So there's the interesting part of it. That on some level, that's good for Japan because if there are better opportunities for your hard-earned money than putting it into a Japanese government bond that loses money, then maybe you'll move it. So how about something like, what would inflation in the United States be like if oil prices go up? Okay. Well, if oil prices increase inflation, isn't that what the Fed's looking at? They're like, well, we're waiting for data. We're waiting for data. I do not understand, Captain. We're waiting for data. They're data dependent, like Captain Picard, right? And when they see inflation, they're going to pull the trigger. Remember, it's not jobs. We already have the jobs. It's wages and inflation, right? And all this kind of stuff. And oil prices going up, like I said, if it goes from 45 to 55, I'm not saying it will. If it does, because I feel like we're still trading a rumor. I feel like nothing's actually really changed. But anyways, if oil prices go up, the Fed will have to raise interest rates in December. See what I'm getting at? And if there's less fear of oil falling, then at least that's new information. What? Not falling it, for one person is rising for another. But anyways, so if inflation's going up, the Fed raises interest rates and the US dollar strengthens. Okay? Isn't that cool? So we were at 100 and we made it to almost 102. Okay. James says inflation takes money out of the consumer's pocket, right? Yeah, but that's why you raise interest rates, so then it's put back. The question is, if we have 2% inflation, okay, but the Fed funds rate is at 0.5, you got a problem, right? So at some point, you kind of want interest rates to be at 2.5. They call that normalization. He makes a comment about OPEC numbers and stuff. Yeah, it doesn't actually matter. In this case, it's simply a perception of a change in policy. Whether they lie on their output, well, everybody lies on their output. So doesn't change anything though. I think the interesting thing is what will happen is American entrepreneurialism or Canadian entrepreneurialism will find a way to frack oil for $30 a barrel. They'll just get better techniques, better technology. As Adam Smith would say, dexterity, skill, and judgment. Everybody read Adam Smith? The Wealth of Nations. Did you know that Harvard sells a collection of books that every Harvard man should read? And it, when put on a shelf, it's about a meter wide. So you would be able to string together, right, like Machiavelli in the mid 1500s to Hobbes and Locke in the 1600s, and so on and so forth, all the way up to today, and understand how global economics work. What's it called? It's called the Harvard Classics, I think. It's really interesting. Every book you should ever read, kind of thing, in your lifetime. It's kind of interesting. All right. So Adam Smith and Wealth of Nations obviously would be one of those to read. And it's not even just because I'm an economist and financier. No, it's just you should read these things. So it's kind of interesting. Rob says, so oil up help the central bank's monetary policy show success. No, I wouldn't say that. I'm saying the central banking policies were designed to create inflation. And if it wasn't for fracking, if it wasn't for, a distorted market, or let's say a dramatically changing market based on new technology that disrupted the norm. Okay, so let's say fracking was never invented, and the oil was just the way oil had been for the previous, 10 or 15 years. So if that hadn't changed, right, all else being equal, is what they say in school, which I never understand because I'm like, well, why wouldn't it change? But anyways, if oil had just stayed the way it had always been for the last 10 years or so, then the policies that the central banks designed would have been successful creating inflation long ago. So last year, the Bank of England would have raised interest rates. But again, all things being equal, right? Who would have thought that Brexit would have come along? Well, that'll screw it up, right? But oil, higher oil prices would have meant, so like let me take you on a little story here. At the depth of the financial crisis, I flew into New York, and I don't even remember why I was there. I just remember it was so early in the morning that it was pitch black. And, I'd just flown in, and I was half asleep in the back of a limousine, right? And I turned on Bloomberg radio because it's got a satellite radio in the back of the limousine, and I'm like, I want to listen to Bloomberg television, so I'm listening to it. And while I'm in the back of this limousine, Australia had raised interest rates. Think of that. The financial crisis wasn't that old, and they raised interest rates. And at that time, they were going to raise interest rates every other meeting for the unforeseeable future. Australian dollar got really strong. And I think Korea was right behind them, South Korea. And that's what the world was like then. Oil prices were still over $100 a barrel. We had gone through the financial crisis, but commodity prices were still very high. And money was flowing to these areas. And because of the high commodity prices, the economies were expanding, interest rates were going up, money was flowing to those areas. And by and large, it kind of stayed that way until, the economy didn't improve. Whoops. So it's just, I kind of just remember cruising through the streets of wherever we were, Jersey. I can't remember which airport I flew into or where we were. I just remember it was super, super dark and just kind of thinking, well, this is interesting, So falling oil prices just crushes that policy. So it's right. So it's not that oil prices is helping monetary policy. It doesn't do anything to monetary policy. But falling oil prices kills any potential inflation because oil is used for everything. The food you eat, the clothes you wear, the car you drive, and everything else in your life touches oil at some point, right? So anyways, it's an important factor in calculating inflation. Also, little things like retail sales. One reason retail sales is down are low oil prices. Low oil prices create low gasoline prices. Low gasoline prices lowers retail sales because the idiots in charge measure retail sales not by units sold, but by dollars. So retail sales are way down. Whoa, they're way down. No, you just pay less. Right? You just pay less. So if gasoline prices doubled, retail sales would be way up. Right? So anyways, so interest rates are unusually low and abnormal, and that's being held back by low oil prices. And low oil prices are correct. They're not incorrect. They're not distorted like the market's not functioning properly. The market's functioning just the way it's supposed to. There's just too much oil. Sure know what I'm talking about? So anyways, let's move on. So USD goes up because Fed raises interest rates. That's it. And yen weakens because there's probably something better to invest in somewhere in the world than Japanese government bonds. And you would buy Japanese government bonds if you lived in a deflationary world and that gave you more risk. So you're like, well, I don't even want to try for the reward. I'll even take the loss. I don't mind losing, what is it, 1.5%, I think, right? I don't even mind losing that if it means I don't lose any more than that. And there's no inflation, so who cares, right? Well, if there is inflation, now you got to move. So for example, if you're earning negative 0.15% on your bonds, on your investments, okay, you could live with that if inflation's at 0, right? If inflation suddenly jumps to 2%, now what? Now you're losing in purchasing power, negative 2.15%. And that ain't good. That bad. What? Well, Gorilla says US GDP. Well, inflation's not going to necessarily impact GDP directly. because, right, GDP is a measure of productivity. How much does your economy produce? Versus inflation, you would be more like the Fed would watch PCE, retail sales, PPI, CPI, right? So that's that. Going back to the yens. If you're expecting weak yen, the other thing that you could catch would be yield, right? If you're a yield hog. So you could perhaps in a scenario like this, right, catch this move. So with the oil news, two things came to mind right away, right? Get some CAD, get some peso, get some Noki. To me, it's all the same thing. You know, oil futures, whatever. Just that's the first thing. First thing that comes to mind. The second one, because of inflationary pressures and macroeconomics, yen weakens. So now you got to catch the carry, right? What currency pays the most? And can I catch it against the yen? And right now, even though it's a bit of a complicated currency right now, there's good things and bad things going on with this sucker. You want to at least try to catch that. And here's your second chance coming in for the role reversal right now. So going in on a smaller time frame, you can see what I did in here, huh? Right? A little bit of a role reversal scenario going on. Bada bing, bada boom. And going back into here now, maybe this sticks, right? Can I drag that across? It's more like that, what I'm paying attention to. Okay. Yeah, I guess we'll do it like that. 37.50, obviously, throw in the pivot. Maybe you can catch it around 50 or 60 is the idea. And hopefully, if we can get a trend, like we don't know if it's going to trend, but if you're doing a trend trading strategy, you're going to try for that, right? Notice, even though this is a different currency pair, I did point it out on another one, even with the dramatic surprise of the news, it came up, touched the monthly central pivot, and stopped. Not even one candle closed. We might have been above that for 2 minutes. And look what happened. Okay. The question, if you're trend trading now, is, you know, lower low, lower high, lower low, lower high, lower low, lower high, low, down into the pivot, higher high, higher low, right? Higher high, and then what? It's going to double bottom. Why? Because now you got a fib here to here, and you just know there are bears here. You just know it. You just know they're there. I already know they're there. We haven't done it yet, but I know they're there. This is their sweet spot. throw in the psych level, you're irresistible, right? So I would say we're going to come up, they're going to drop it, they're not going to have enough, and maybe like this on the longer run. Or people wake up and say, you know what, this whole oil thing, this whole OPEC thing, it's all nonsense. And then we do bring it back down. Overpriced on rumors and conjecture. Gorilla's like, is it a done deal? What about non-OPEC members? And all? Yeah, all of that is right. And it's all not likely to actually make any physical changes. Like as far as the amount of oil in the world, none of it's likely to change. So once again, and I've said this dozens of times, if you agree with Saudi Arabia and Iran and Russia and Venezuela and Libya and so on and so forth, if you agree with them to not produce any more oil above 100% capacity, then it's not a real agreement. Right? Oil inventories will still be too high. It could be years before we draw anything like that down, because it's not the drawdown per se, because we can always get more oil, right? But I think what will happen is we need global macroeconomics to improve so that we increase demand. And we start buying, I don't know, electric cars again. I was looking at a Fisker the other day. Anybody know what a Fisker is? I'm like, I can't buy a Tesla. These scumbags on the planet's got a Tesla now, right? So I'm looking at Fisker, and I'm like, dude, they're Karmas now. They're called Karmas. But what an interesting car. Yeah, they just got a whole bunch of new money. It's not a Fisker anymore. It's just a Karma. But very, very interesting. And I figured there's no resale value, so I would offer the guy way too little because nobody knows what it is at all. So there can't be a resale market for it. So I'd offer him pennies on the dollar so he can get rid of it, and I'll take over his Fisker, which is a really nice car, knowing that I'll never be able to sell it. So I'll just drive it around like a golf cart. But it's a much better car than a Tesla, because it has a gasoline engine, even though it's electric. So I can drive around town like a golf cart, right? It's 70 miles an hour. I can drive around town up to 50 miles. But then if I need to go more, the gasoline engine just kicks on. But it doesn't power the wheels. It powers the electric motor. Like, how cool is that? So now I can drive I can drive all the way down to Florida. I can drive from Atlanta to Miami in my electric car, stopping for gas along the way. So anyways, it was neat stuff. So anyways, there's another long there. So I just wanted to share the logic behind everything and how to move quickly on news, right? So Gorilla is very concerned about the second quarter GDP, even though we're about to enter the fourth quarter, right? It's kind of funny, right? Oh no, second quarter GDP. Like 6 months ago, right? So that's the funny thing about GDP. Do we really care about what happened 6 months ago? But anyways, if you guys want to see an interesting car, look up the Karma. I think it'd be cool. Mostly I just want to pull up to my buddy with his Tesla and like, dude, do you drive a Tesla? Really? I'll race you to Miami. Oh, I'm not against Tesla. It's just everybody's got one. They're like, they're like, I don't know. Yeah, they're nice. Yeah, they're all scumbags. So I don't know. I don't know. Everyone's got one. They're price for the karma. Well, price is always negotiable. So anyway, so this is going up, and the higher it goes, the more likely I'm going to buy one, right? So that's all good. So that's nice. We're ending the quarter, and it's been a good month. I'm above monthly target, but it's usually not the greatest of quarters because you have 2 slow months and then sometimes a good month. So I would give myself average to decent, good. It's one of these things like you never know if you're going to survive. So like if you live in a log cabin and you make it through the winter, you're like, geez, that was a horrible winter, and I'm not really surprised that I survived, but I feel pretty lucky anyways. Like there was a lot of things that could have killed me over the winter, but I prepared. I stockpiled. I sharpened my saw. I sharpened my sword. I, ate some beef jerky, had some field mouse soup a few times, but luckily enough, a deer came by and a rabbit came by, and yeah, and you get through, right? Yeah, I wish I didn't have to eat my wife. So it's just it's one of those things like getting through the summer. Is sometimes like that. You're like, yeah, I knew it was going to be a long haul, and I knew it would be frustrating, and I knew some of the months were going to be lean. Right? What is that? There was how does this there was a man who could eat no fat and she could eat no lean, but betwixt them both, pick the table queen. Something I don't know. There's a children's rhyme somewhere about I think a fat man and a skinny woman, or a fat woman and a skinny man. I don't know, but anyways, looking back as we end this quarter, moving into the fourth quarter, yeah, it was a lean summer. There were some interesting things going on, some real big risk events, right? Like Brexit, for example, right? And the potential Fed hike and potential adjustment by the Bank of Japan and a lot of things. And yeah, and still alive, did what I was supposed to do, hit the targets. Wish it was better. Could have been a lot worse. Nothing to complain about. No bloodbath. That kind of stuff. And feels, I guess, all right. And, hope is not a strategy, but praying never hurts, right? So now it's like, will this OPEC news and meeting create a trend? And this is where I'm on my hands and knees because I need a trend in the fourth quarter. Whether you buy a boat or you sell your boat rests on what happens in September, October, November, December, right? And if you can get a good trend, Papa's buying a new boat and it's 3 feet longer than last year. If you don't get a trend, you're like, how much will you give me for this boat? Right? Like, oh, it's a real good boat. I really love it. It's a shame I have to let her go. You're going to have so much fun. Yeah, cash, please. Yeah. Yeah. And it happens. I've met people that, make $30 million a year and have no money. Literally more than 30 million a year. Not just 1 year, every year, and they don't have any money. And it happens where they're just like, they don't have any cash. I'm not joking, like literally no cash. They own houses and yachts and jet planes. Like the one guy I'm actually thinking about, he was low in cash, right? And we were just like drinking wine. I think he was drinking my wine, and he's like, "Yeah, I got this house here. I paid 30 for it, but you know we don't really come out this way anymore, and we'll take 20 for it. You know, are you interested? Do you like this area?" I'm like, "What are you talking about?" Yeah, and he's like, you know, like we're just kind of done. This area is really nice. You know, the kids are older and stuff. We're just not coming this way, so we're going to dump it. So yeah, we're into it for 30. You know, but hey, if you're interested, we'll take 20. You know, 20 million for a summer house, the one that he never comes to. He's like, yeah, we're here like two or three times a year, but not with the kids now in college and stuff. There's just not a lot of reason to be out here. So we paid 30. We'll take 20. Just casually as he's drinking my wine. 20 million. He'll take the $10 million loss. He just needs cash. Isn't it amazing? And then this later, the same, or maybe the next day, I'm talking to a guy who manages fleets of Ferraris for guys like this that have, you know, hundreds of Ferraris. Same sort of conversation, and he's like, yeah, I won't hear from the owner for 9 months, maybe a year, and I'm just fixing his Ferraris, and it's all museum quality. And all of a sudden, he'll call up and he's like, sell something. How much cash is in the account? Well, we got like 2 or 3 million laying around. All right, I'll need that transferred now, and sell a couple. I need 10. Give me 10 million. I need it in the next 72 hours. Sell something, wire me the money. Have a nice day. Click. Because the guy's just broke and needs some, Roman money. Amazing, huh? But maybe this guy needs a person like you to sit and watch the markets all day while he doesn't pay attention to anything. James says he did a house for a hedge fund manager that had 5 $10 million homes. More than 10 million. Yeah, he had 5 of them, right? Yeah. Oh, within a 100-mile radius. Yeah. Yeah, James, you're up you're like New York-ish, New York upstate or something, right? Yeah, so the summer house I'm talking about is in the Berkshires up in Connecticut. And yeah, you know that's totally possible, right? That the guy paid 30 and he's just dumping it for 20. You could just do it on a handshake, no real estate agent, no nothing, just like, yeah, I need the cash, man. So yeah, it's interesting how 1 year you buy 3 or 4 houses. One's 15 million, the other one's 20, the other one's 8, and you got them all over the place. And the next year you're like, yeah, I need the cash, I need cash, but you own all these houses. So, anyways, the ups and downs of the market and the economy and all that kind of stuff. Great. So dollar's strong. Not a shock to me. It's not because of GDP per se. I would venture to guess. I mean, I don't know why people would buy these things, but I can tell you that the dollar should, based on what's happened in the last 24 hours, should plausibly increase in value. Like I said earlier, a floor in oil prices, even if it's a theoretical one, didn't exist before. So now the argument of this could go down to $25, a barrel again, is unlikely. So now we're looking at $40 to $45 a barrel, lowest end of the curve, which is actually profitable for even frackers, for some frackers. right? Especially ones that rolled over their debt. Great. But it leaves upside potential now. So if OPEC was successful, I don't know, over the next 6 months to a year, I don't know, able to raise oil prices, then that will increase inflation. That will give the Fed the data they need to raise interest rates, which puts December totally in play now. If oil prices breach 50 bucks, I would say they would have to. And then if it goes above 50 to 55 or 60, which I don't see why it would, but it could, that's more interesting. That's more important than if it will. If it could is probably more important. So if it could, then there's a couple more interest rate hikes. Well, those are not priced in the market. Remember, they were priced in the market in January. We had to unprice them, and now we need to price them back in. Or you could just say it went up to 113, 114 again. That's our no-fly zone, and it's supposed to fall. So this is just a continuation of what we talked about a month ago. This is just starting to happen. One way or the other, U.S. dollar's getting strong. Oh, it's the GDP. No, I don't know, dude. Wasn't it always supposed to be falling this whole time? Yeah, Gorilla. Yeah. So you have to follow the logic. Higher oil prices creates inflation, which makes the Fed raise interest rates. But also, it's not just the Fed. The reason the yen gets weak is every central bank on the planet has created a policy that would benefit them. And this policy assumes higher inflation than the Great Recession that occurred, right? Well, we passed that problem, but we never got our inflation back because of low oil prices. So if we can get the higher oil prices, they get whatever they need, and they needed that because it gave them whatever they wanted, whether it's a higher currency or a lower currency. They took the policy that would get them that higher or lower currency, but it assumes certain things in the model, like a certain oil price, which was way higher than the actual. So if we can stabilize or even increase oil prices, whatever these central banks wanted are suddenly more likely to get them. So things that were supposed to go up start going up now. Not because it happened, because it's assumed it may happen. So people are getting in the trade. And anything that was supposed to weaken will probably weaken. So again, if inflation's created and the Fed has to raise interest rates, you move your money, let's say over here, and get it out of Japanese yen, because you don't want to face inflation in Japan and have a larger negative yield on real terms. Do you understand? So you have negative 0.15% negative interest rates on Japanese government bonds, let's say, but in real terms, if inflation does go to 2%, now you're losing more than 2% by investing into Japanese government bonds. Nobody wants that, so they're like, look, dude, I was happy with Japanese government bonds when there was no inflation, and I was losing hardly anything in real terms. Basically breaking even, but guaranteed safety, right? Great. But now that there's inflation, oh my God, give me that back, because I'm going to lose in real terms, and I need to put my money somewhere else so I can make more than 2% profit to offset my 2% inflation, which is, a hidden tax or a hidden devaluation, if you would. So anyways, now you got to make more than 2 if we're going to have higher than 2, and all of a sudden people are scrambling. So the yen gets weak, Kiwi gets strong, is what I'm showing you here. But I did this within 4 minutes of the news yesterday. This one took me a little longer to catch, but I did CAD first because you got to catch the oil trade. Peso, Noki, so on and so forth, right? And then you move over to yield hog trade. Right. Lawrence is right. So maybe you don't want Swiss franc anymore. right? So anyways, so this trade here is a yield hog trade. The only reason you take it is you want the yield. So that is a strategy, right? You can be a yield hog. You can be a gold bug, you can be a yield hog. Carry trade. So again, the important message is the thought process, right? The thought process. Boom, 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 boom. And we're lucky and fortunate to be on the right side of the trade, and feels good today. Good way to end the quarter and gives us hope into the future, right? Hope is great. Hope is grand. Hope is good. Hope is beautiful. So when the market's moving like this, do what you're supposed to do. Remember, this is a dress rehearsal for your life. Oh wait, you're living your life. So behave the way you're supposed to behave under these circumstances. Pretend somebody's watching. Because if you're doing things right, you want people to watch, right? And there might be some guy that could just throw you a few million, and it's nothing to him, and it's a lot for you, and because you're worth it. Yeah, here's 10 million. Trade that for a year or two, and if you do well, there's more. They always say that. It's amazing. Yeah, and if you do that, well, there's always more. Oh, well, sure. But that's the story, and it's out there. So prepare for that. Right? And how do you find people like that? Why don't you sponsor a charity event and rub elbows? Maybe it's an equestrian event, horse jumping. And hang out with wealthy people. And it doesn't hurt to be the smartest person in the room. That helps too. So find really dumb, super wealthy people. Yeah, it never hurts. It never hurts. Yeah, and they're like, dude, you're super smart. Mm-hmm. Yep. Throw me some bones. And try this. They say, well, take $1 million, and if you do well, there's more to back it up. And you're like, no, my minimum is 3. It's just nothing in it for me. Why would I work that hard for that little? How hard would you work, sir, if you only made the percentages we're talking about? Like you paid your landscaper more money than that, and you're expecting me to do 50% return on your money? Like that's crazy. And then after that, you got to then take my percentage, and you do all of that, and this, that, and the other thing, and like you're paying your landscaper more, dude. So the numbers don't even work unless you give me 3. But I mean, it makes sense, right? And the guy's like, yeah, that makes sense. Here's 3. And by the way, his landscaper probably does make more. Anyways, hey, peace on earth. May the pips be with you. May your profits be above average. I'm just trying to point out that this is happening, and it's not even really a dress rehearsal. This is it. You're there. You're a currency trader now, and the markets are moving. It's the end of the quarter. It's the beginning of a new quarter. When are you going to change your behavior? What better time than the end of the quarter? And the markets are moving, and macroeconomics may be changing. This could be the beginning of a trend that goes on forever, or maybe it doesn't. But the thing is, When are you going to change? When's the new trend for you? Right? Why don't we just start now? Right? Yeah, let's all kneel in and pray. Come on, girl. Everyone take a knee. Yeah. No, but it's like, all right, so finish up the week, finish up the quarter, finish up, and let's, Monday, you should be a new person. Right? On Monday, use it like a changing of the guard, a tip of the hat, if you will. Change your clothes. I mean, seriously, wear something different on Monday. Wear a suit and tie. I'm not joking. Monday morning, wear a suit and tie and say, I'm a professional Forex trader starting today. We're gonna wrap up 2016 like a pro. And I don't need big numbers, I need consistency that can be counted on. You understand? Okay? If things go right, you should be pulling in 5%. I did a little more than that. I did closer to 10. It's a little high, but the market's moving. It was a little choppy, so okay, fine. But let's keep it focused and just the 2 to 5%. And if the market giveth, great. If the market doesn't, fine. But just stay focused and be a professional. No one's asking you to hit home runs. Okay? So anyways, peace on earth. May the pips be with you. May your profits be above average. Is it a Thursday? I think it's a Thursday. So that means I'll be at FX Street tomorrow. It is a Thursday. Wow. Yeah. So I'll be at FX Street tomorrow. If you're a premium member, I'll see you over there. And if not, well, you take care of yourself. You hear? Brooke's got one more question. I've already gone 15 minutes over, but. Brooke's typing. Yeah. Where can I find the video of the 4 highly effective? I don't know what you're talking about. Where can I find that video of the 4 highly? I don't know what you're talking about. So, I honestly have no idea what you're talking about. So, anyways, we got to roll, yo. Peace on earth. May the pips be with you. May your profits be above average. And yeah. Take care.